Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, whether it might come from the economic calendar, could come from headline news or geopolitical, sometimes a combination. But it even gets a little bit more confusing when the market quickly sentiment changes when good news is now bad news and vice versa. So we try to give an explanation of what's going on with the markets and where they're heading towards and why they're doing what they're doing. So that way you can make an informed decision, or if you're maybe in the industry looking to just kind of follow along, hopefully this will give you some information or insight of what's going on, so that way you can hopefully relay the message. But for those who are looking to refinance or buy, well, you might be following rates and want to know when's a good time to lock in. So hopefully this will give you that information you're looking for to make an informed decision while you're looking through the process. A little bit about myself is I am a loan officer. I do work with the national lender, so we do loans in all 50 states. If we can be of assistance for you with any refinance or purchase needs, please reach out. We'd love to be able to talk to you a little bit about how we can help you guys out. But more than that, we'd like to be able to be a resource for you folks. If you guys got questions about anything, please reach out. We are here to try to help you guys out. Without further ado, we'll start off with our economic calendar. We got a very minor report today, and that's the wholesale inventories month over month for the month of March. So in February, it rose 2.3%. Forecast is supposed to keep that trend at 2.3%. It did, came in expectations. So not a real big deal. We don't got, this week will be rather light in terms of what we get for economic data. The bigger one will be on Wednesday. We get the CPI report. So we got some inflation data coming in. So we got the CPI as well as the PPI, which is the producer price index, which is on Thursday, and that measures for inflation on the wholesale side of things. So they don't always get the respect that they deserve, but it will be kind of important to note if it seems to be peaking. Right now, investors are watching, still watching, not now, but they're still watching inflation data. They want to see if it's already peaked and see if we've already reached the top, and hopefully maybe start seeing it reside a bit. So those will be items that they're looking for. Right now, stocks are down a bit today. Again, they've been taking a bit of a beating of last. They are concerned that perhaps after the Fed announced last week that they took the 75 basis points off the table for a rate hike, that they may not be doing enough to stave off inflation. They see that the prospects of a slowing economy could be in the future, and they also feel that the Fed may not be doing enough to bring inflation down. So, and what does that basically translate? That we may see stagflation. That's the biggest concern, is that we may see stagflation. So, investors have been basically in more or less a sell mode. So today we're getting a benefit of that sell mode in stocks, and but the last week we were getting quite a bit of same days where stocks were up and bonds were up, and then or down, and then we would be down as well. But today, stocks are down and mortgage-backed securities are up. Right now, we're currently up 36 basis points, and that translates to better pricing for our mortgage rates. So we should see an improvement in our mortgage rates. This morning it was very volatile. It was a lot of going up and down, up positive and negative territory. But just before 7 o'clock, it just started rising upwards. So we've been having this upward mobility, and this is also we started getting a lot of reprices for the better. So pricing came out around this time frame, and then we've had a number of lenders come in and reprice for the better as we approach this level here, which is good news for those who are in the market to refinance or buy. So again, we're still obviously down here a bit, but we're seeing some improvement in mortgage rates as a result. And on top of that, we have the 10-year treasuries come down below this technical level. Right now we're down to just under 3.08 right now, after being in the double digits like 3.011 or something like that. I think at one time we were touching. So good news right there. And last but not least, we will touch on what's the average rate for conforming limit. These do have points built in to them, and these are just kind of a baseline you can kind of gauge as to if you're getting rate quotes, what kind of a quote you're getting out there. All right, so let's take a look at the 30-year fix, which is now up to 5.64%, and then the 15 years at 4.91 now. So again, if you guys would like a rate quote, I'd be more than happy to assist you guys with that. everyone's rate quotes are usually a little bit more personalized, primarily because not everyone fits their counterparts. That could be the variables coming from amount of equity or down payment. It could come from FICO scores, the loan programs that are available on there. So we do got a lot of loan programs available that are fantastic for a lot of people, and so please reach out. We can certainly help you guys out. If you guys like these videos, we ask that you can help us out. If you can help us out by liking and sharing our videos, we greatly appreciate you folks. Thank you so much for watching. We look forward to see you guys in tomorrow's video. Bye-bye.